Goldman Sachs kicking off its second ever Investor Day this morning, and joining us right here at the bank's headquarters in downtown Manhattan, first right here on CNBC, is Goldman Sachs' chairman and CEO, David Solomon. David, thank you for joining us.
Thanks, Andrew. It's great to have you here in the building. I think this is the second time we've had you here in the building in the last year.
Big day. Help us understand what you're going to be talking about today. There's been a lot of noise, dare I say. I think almost every other day there's now a new headline about Goldman Sachs, about you, about what the firm is, what it isn't. Some of the criticism fair, probably some unfair. What do you think the investor community and maybe the public misunderstands about Goldman?
Well, first of all, I'm excited to have you here today, and I'm excited to have our Investor Day today. This is only, as you highlighted, Andrew, the second time in over 150 years we've brought investors into the building to give them an update on our business and our progress. And I think you know, back 3 years ago when we had our first Investor Day, we laid out a clear strategic plan for the firm. We laid out a plan to invest in our core businesses. We pointed to 4 areas that we thought were interesting opportunities for the firm to grow: asset management, wealth management, transaction banking, and also consumer banking. We said we'd run the firm more efficiently, and we put out some targets and metrics to track our performance over time. And today, we're updating investors on our progress. And candidly, we've made a lot of progress over the last 3 years. And I'm excited to have a number of my colleagues, Dan Dees, who's one of the 3 people who runs our big global banking and markets franchise. We'll talk about the progress we've made in that business, the strengthening of that business, the market share gains in that business. We'll talk about the asset management platform, and we'll also update people on our journey around the consumer business, which has obviously gotten a lot of attention. But I feel good about our progress. I've spent a lot of time with investors over the last few months, and I know our investors are excited to be here and get a little bit more information as they track our journey.
When people think about Goldman and they think about the valuation of Goldman in the banking space, I think there's still a lot of questions broadly about what it is that a firm like Goldman needs to do to transform itself. Consumer was one of those pieces that people thought might transform the valuation and the story in a different way. That hasn't happened. How do you shift around that?
Well, when we laid out our plan 3 years ago, we talked about a number of avenues for growth and opportunity. And I think it's absolutely fair that our execution around the consumer platforms hasn't been to the standard we'd like it to be. There's still opportunity for us. We have some interesting platforms where we've built good technology and have good partners, and we're working to improve the performance of those platforms. But the real story of opportunity for growth for us in the coming years is around asset management and wealth management. And if you look at the work we've done over the last few years to put that platform together, we're running the 5th largest active asset manager in the world. We set a management fee target a few years ago when we had about $5.5 billion of management fees for $10 billion of management fees in 2024. We finished last year at $8.8 billion. We're clearly on track to meet that target. We continue to meet our fundraising targets. We started with a fundraising target in alternatives of $150 billion. We blew past that ahead of schedule. We're at $180 billion, headed to $225 billion of fundraising. So there's real opportunity across the firm for us to continue to make the firm more durable. And I'd also point to, Andrew, and this is one of the reasons why I think our stock on a relative basis has performed reasonably well over the last few years, is that we've grown the earnings of the firm materially. So our EPS in 2022 was 40% more than our EPS was before our last Investor Day. So we're making progress, but we've got more work to do.